On today's episode of the Cryptoverse, we're going to do a mini market roundup. We're going to look at some businesses who are facing bank account closures in Singapore. We're going to look at how AMD and Nvidia are kind of on the fence. They kind of like it but don't like it when they get loads of sales from cryptocurrency mining. And then we have Mario Draghi, the president of the European Central Bank, saying basically they have no power to regulate Bitcoin. Very interesting stuff, so let's get into it. First of all, a quick market roundup. We have the biggest winner today is NEO. It's up 12.93%, and that's another big jump for NEO. It's ranking there in 12th place with a $1.3 billion market cap. And biggest runner-up there is Quantum, 15th place by market cap. Quantum is up 10.62%, and it's trading around $9.74. Biggest loser of the day is IOTA, in 8th place by market cap, down just 0.32% to 54 cents per million IOTA. And then for the Crazy Coin Award, it's not too far away. It's in 26th place. It's gas, NEO's gas. And it's up 50.58%. It jumped a lot yesterday. It's now up another 50.58% to $25.80. Pretty interesting. Bear in mind that gas is what you get as kind of like a dividend for holding NEO in your wallet. So that going up in value is very interesting. But if that means that gas is the fuel that you use to pay for NEO transactions, doesn't that make it more expensive? I don't know. Let me know in the comments below about that. All right, moving on to the actual news stories then. I'm looking at the Bitcoin price chart here, and yesterday Bitcoin made an attempt at 4,000, didn't quite break or go above it. Today it's making another attempt. Right now it's $3,951.80. The high of the day is 3,985 dead. So we'll see if it can hit or break that 4,000 today. Speaking of Bitcoin, I'm looking at the SegWit chart here on segwit.party. And in the last week, we have stayed pretty steady above 4%, meaning 4% of all Bitcoin transactions in the last week have been using the SegWit addresses or the SegWit technology. So that's kind of interesting. I like looking at that to see as that number goes up, then it should scale the network, and because SegWit has a greater capacity to process more transactions in the same block because it doesn't use the signature in the block size. But anyway, moving on to the news stories. First one comes from CoinDesk. This article is called Bitcoin Businesses Face Bank Account Closures in Singapore. Now, to me, that was pretty surprising because so far I thought Singapore was kind of a friendly jurisdiction when it came to Bitcoin and cryptocurrencies. You've got 10x based there, you've got a bunch of other companies based there, and it was a surprise when they came out and said, well, you can't actually participate in ICOs if you are a Singaporean citizen, even though that a lot of ICOs had been based there. So anyway, so this says, according to a report by Bloomberg today, as many as 10 companies have reported issues in recent weeks. The Monetary Authority of Singapore, MAS, which is the country's central bank, told Bloomberg that it doesn't interfere with commercial banks' decisions taken by individual banks. So they're saying our job is to regulate the economy and set monetary policy, but if a commercial bank decides not to deal with any particular customer, nothing to do with us, right? So they're going to let these banks close the accounts of cryptocurrency-oriented companies. So CoinHako is one of them, a Singaporean-based cryptocurrency provider, announcing the closure of its DBS bank account in its blog post on its website. And the article says here that while it did not state a reason for the bank's decision, it said, quote, regulations and the exact role of the blockchain in society continues to present as a grey area to everybody, close quote. So, grey area to everybody. The banks don't know what to do with it. Maybe they're a bit afraid and they don't want to touch it, so they'll just distance themselves from companies that use their banking services and are involved in cryptocurrencies. Maybe the banks are afraid of their implications in regulations that come into the future. Like if you are providing banking services to a cryptocurrency company, does that implicate the bank in any kind of regulation? I don't know. Maybe that's what they're talking about. So very interesting story there. Moving on, this next story also comes from CoinDesk. This one's called Like It or Not. Public companies are feeling the crypto boom. And it relates specifically to the graphics card manufacturers AMD and Nvidia. So it says here, while cryptocurrencies may be back in the headlines, most public companies are today keeping any interest in the technology on the periphery of their business. For tech giants like Nvidia and Advanced Micro Devices, AMD. However, that is no longer an option. Both companies posted eye-popping sales figures over the last half of this year, as miners exhausted online and in-store inventories of graphics cards. And in response, Nvidia and AMD grew second quarter revenues year by year by 56% and 19% respectively. So when you get big sales jumps like that, you can't ignore it because it affects your business, like seriously. So this equities analyst at BMO Capital Markets, who covers both companies in his research, told CoinDesk, quote, "I don't think these companies are happy. The volatility is tough to manage from a business perspective. Crypto for these guys is not their main focus," close quote. So that's the thing. They don't want to turn entirely to crypto because it's not their main focus. But at the same time, if you get a 56% boost in sales from that market, then you kind of have to look at it, don't you? Then later on in the article, it talks about more money, more problems. Should mining demand dry up? This is the key thing. It might send share prices tanking, as is what happened to AMD in 2013 and 2014 after a collapse in the price of cryptocurrency prices. So they've seen this before, no wonder they're wary. For multiple quarters, AMD's sales were adversely affected as miners dumped their equipment at low prices on the secondary market. So all of a sudden, anyone that was wanting to buy a graphics card for actual gaming could suddenly get an abundance of second-hand ones that all the cryptocurrency miners were selling. And of course, direct sales from manufacturers would have tanked. Not good for them. Because great big boom, but then great big bust until that second-hand market supply is taken up. Finally, it says here, the firm's research reveals that AMD lost as much as half of its share of the GPU market after the 2013 bust. A good reason for AMD's chief executive to focus on mitigating the risks incurred from the mining boom rather than going all in. So if they were greedy, they could just go, oh great, and then focus on the mining industry, and then when that business dried up, they may have alienated their core market of machine learning, which people use graphics cards for, and also gaming, of course. So those are the two big markets for them. So very, very interesting. There's more in that article. It's quite a long one, but that's the gist of it. Moving on to the third article for today. You'll never guess what. It also comes from CoinDesk. So CoinDesk have got the triple threat today. So this one called Mario Draghi. European Central Bank has, quote, no power to regulate Bitcoin. So Mario Draghi, president of the European Central Bank, ECB, has indicated that his institution does not have the authority to regulate cryptocurrencies. Wow, that's bold coming from that guy. Here's a quote. We have to ask what effects cryptocurrencies have on the economy, he said, adding that they are still too immature to be considered a viable method of payment. Well, where do you start? Because that's a catch-22, right? It's like if I say, well, I don't do things for the first time. Well, if I don't do things for the first time, I'll never do something for the first time, and then I'll never do something for the first time, or the second time. So if they're saying, well, it needs to be mature to be a viable method of payment, well, in order for it to mature, people need to start using it as a form of payment, right? So that's where you get the whole bell curve thing. You know, the innovators, early adopters, early majority, and all that kind of thing. So that just annoys me. These people just don't know what they're talking about in this regard. Anyway, it goes on to say, the primary concern for the ECB surrounding cryptocurrencies and digital innovation more generally is cybersecurity, he went on to say, stressing that protecting against cyber risks is central to the ECB's agenda. Well, sir, if that is true, you would embrace cryptocurrencies because they use a fundamentally different security model called edge security. So unlike banks which are centralized, the whole idea of having a decentralized cryptocurrency network with public-private key encryption on device, like on your iPhone, is that it pushes security to the edges. That means if you compromise a single device, you only get the cryptocurrency in that device, not breaking into, say, NatWest's central servers or Equifax and stealing half the Americans' population's worth of data. So, if security is your highest priority, and the fact that cryptocurrencies use an edge security model, you would embrace them because they're more secure than the actual security model that we're using in the old banking system. So, suck on that. Moving on, it says, earlier this month, Draghi also criticized the proposed initiative by Estonian e-residency project to launch a national cryptocurrency called LiteCoin. reportedly saying, quote, "I will comment on the Estonian decision. No member state can introduce its own currency. The currency of the Eurozone is the euro," close quote. So Mario Draghi does not like Estonia issuing their own currency because they are part of the European Union. This is why Britain left the European Union. This is why I voted for Britain to leave the European Union. You cannot have a central planner dictating what your country can and can't do. That's the whole thing about cryptocurrencies. It's a completely free market. All those 1,000 odd, how many are there today? 1,128 cryptocurrencies listed on CoinMarketCap. You've got to allow that permissionless innovation. And the same goes for individual countries. Because the European Central Bank has a meeting, or the European Parliament has a meeting, and then decides this is the way we're going to rule Europe, that doesn't mean it's going to work for all member states, because they're all queer in their own way. They've all got their own nuances, their own cultures. You have to allow that true diversity to flourish. You can't slap down a cookie cutter blanket rule on these people, because it's just not going to work. So that's proof of it. When Estonia tries to push the envelope with their EstCoin and their e-residency program, then some bureaucrat in the ECB says, no, you can't do that. That's permissionless. That's authoritarian. We don't like it. That's why we're in cryptocurrency, because we don't want central governments telling us what to do. So thanks very much for joining me today, guys. If you like this episode, go ahead and hit that like button. And if you're new around here, get subscribed. This is not the normal format. I'm on the road, so apologize for that. If you'd like access to my very best material, by the way, such as my structured online courses that will teach you things like how to make and save money with Bitcoin, check out cryptoversity.com. All right, guys, that's all for today. I will do my best to come back tomorrow with another episode of the Cryptoverse. But the Mastery Retreat starts today in like 2 hours' time. So I'll see you then. Until then, it's me, Chris Coney, saying bye for now.